take a look at the pound dollar real briefly. Okay, so if we look from here, which was the beginning of December. December kind of started off on a sour note. It tried to rise, but then December was really just a bad month for the pound dollar. If you were getting our Ichimoku reports, we were forecasting that once it broke 6,200, it would probably make its way close to 5,700. We came within about 100 points of our target. It's still, falling, but the bottom line is that this thing had a very bad December. And look how many red candles, consolidation, and just a lot more red. Only the last few days of the year we're actually able to salvage something for the pound. The bottom line is that it had pretty much 1 month of declines. Now, the most interesting Kumo structure here is, of course, this flat top, which goes all the way until the 21st, 22nd of January. So we want to see if there's any other things out there that may coalesce with this. And what we have here is a 50% fib and a Kijun all posting up within about 20 or so pips of each other, give or take. So we feel that this is probably the most major upside test in the short, medium term that pound dollar is going to face. We think if somebody's going to throw reversal chips into the play, that it's going to be between here, the 50 and the 61.8, and more probably isolated around here. However, we do have a lot of wicks. We have boom, 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 4 wicks here around the 63.80 area. So this could be a potential reversal or ambush zone if somebody is looking to go short. For us, this is the most interesting short to medium term price levels on the upside for the pound US dollar. On the downside, the most recent lows, and then we have the 157 down here as well. But the pressure is kind of on, and it has demonstrated that the 20 EMA, which it failed to close above it, rejected twice as off of it. And if you look, let me delete this line here. Take a look. These are rejection zones. Both of the wicks are above the 20 EMA, but none of them were able to close. Either day was able to close above the 20 EMA, and then today opened, climbed, and look at where it opened. Let's pull up the display data box. Price opened at 60.82. It climbed to a high of 61.52. Where was the 20 EMA? 61.50. So it went 2 pips past the 20 EMA, and then its current price, 60.39, means it's sold off 114 pips from that 20 EMA. So if you don't think this 20 EMA has some short-term influence on this pair, think again. It's obvious that the 20 EMA was probably the best play you could have come up with today, because that one was showing that there's an immense amount of rejection there. Okay, so to me this is going to be kind of interesting for the pound US dollar. Other than that, I don't really like the intraday structures on the pound US dollar. Why? Well, we can just take a look at this candle here. And if we look at this candle, take a look at it. We got wicks on both sides of the market. So there is a combination of agreement between the buyers and sellers, but there's no agreement about who's in control. In other words, nobody wants to take control yet. If somebody did want to take control, they would have a little more dominance as of now, and we don't have that. There is a little more pressure to the downside. So the bears have a minor amount of control over the bulls right now. Why can we say that? One, well, the pair is down from the open. Two, the pair opened, climbed, and then reversed very sharply down. So the largest moves to date within this day, within today's price action, were with the downside. In fact, if we were to look at, say, something like a 1-minute chart, and I know you rarely ever see me looking at a 1-minute chart, but just to highlight it, this is where we opened, right around here. So we opened right around there. Look at where the sharpest moves are on 1-minute chart. you can clearly see the most impulsive moves are to the downside. We've started a little bit of a rally to the upside, but even then, the most impulsive move, one move, wipes out a much larger, longer move. So it's trying to build some upside. And it's showing that there's two-way interest between the 20 EMA and 59.90. But the bottom line is that overall, there's been more control exerted by the bears than there has the bulls. And so with that being said, there's a relative agreement that it's two things really. Nobody wants to take control yet, and they both agree, both buyers and sellers both agree that price seems pretty stable somewhere between here and here, somewhere in the current area of where we are now. Why can I say that? Because we've had more price touches on that price level than any other single individual tick price for the entire day.